How Baidu has changed China's internet industry. Now this is thoughtful. Hello, I'm Trevor Lai in Shanghai. You wouldn't know there's a global recession going on from Baidu's latest earnings report. The Chinese search giant's performance shot past investor expectations. Third quarter profit rose 80% with a better than expected ad revenue forecast for the fourth quarter. China's internet industry has seen a significant shift from using cash on engineers that copy products to investing in China's digital ecosystem, especially in popular verticals. This week on Thoughtful China, we'll look at the investments behind Baidu's growth, what its competition is doing to catch up, and what opportunities their innovations will bring advertisers. Plus, our own PT Black will look at the implications of China's unique internet ecosystem. But first, with us is T.R. Harrington, CEO and founder of Darwin Marketing, a search marketing specialist in China. T.R., let's start with Baidu's recent earnings report. Their forecasted 8.6% growth in the fourth quarter far exceeds what analysts thought would be around 4.8%. Were you surprised by this?
I mean, I would say you can never be totally surprised that Baidu is still growing, right? This is, the leading search engine publisher in China. They're much like Google is in the rest of the world. They are powering e-commerce. They're powering, things that people are looking for. So I'm not totally surprised, by this growth, but still, it's quite good. It's above expectations.
What's their market share of the search space in China? Do you have it?
I would say it's north of 80%, at this point in time. And if we just look across the pond and we look and see how Google's, own development has transpired, they're already north of 90% in Europe, and they're north of, I would say, 75% or so in the United States, with, in a lot of ways, much more deep, stronger competition, going up against them. So my own feeling is that Baidu is going to continue to grow from strength to strength. They're going to continue to grow their share, and hopefully they will continue to create, very market-responding products like they've done so far with Baidu Brand Zone and their integration again with the Weibo product. I think it's quite interesting.
So, I mean, players like Microsoft and Google here in China really aren't making any sort of a dent at all. If anything, it sounds like they're slipping. Well,
I mean, Google's in a very difficult position, in all honesty, given how they chose, to play out, the year and a half ago. And obviously, Microsoft has decided to partner directly with Baidu, right? So it's unlikely that, that Baidu's going to receive competition from Bing, right? And Google's just honestly going to be in a very difficult position to advance their interests now that they've really kind of relocated things back to Hong Kong. So Baidu's competition is really from, the domestic players. Will Tencent Soso become a bigger competitor? Will, Sohu's Sogou become a bigger competitor? Will Alibaba become a competitor? They all keep trying, right? They all keep investing, they all keep chasing, but Baidu still remains the king.
And so that search business is only part of Baidu's success. I mean, if you look at their investment strategy over the past 18 months, where are they putting their money?
True. I think Baidu is leading the pack in a lot of ways in terms of their corporate strategy, their investment strategy. They certainly followed a very traditional, I would say, internet route of saying, we've got cash, we will invest in our own R&D, we'll build our own products. But, things like You'll did not necessarily turn out so well after making those, investments. But where I've seen a big change is over the last 12 to 18 months, they've really started to invest in the ecosystem, especially in places where they can aggregate more data. For example, their acquisition of Qunar, the largest, travel price comparison website in China, now enables them, if somebody types in Beijing airfare, to actually show updated prices right inside the Baidu search results so that a user can get what they need, without having to go anywhere else. Because even though users want as many options as possible, when it comes to finding information, they want fewer ones. This isn't, you have a primary search engine. You don't go to your second and third search engine very often. So if Baidu can continue, or Google can continue to develop products that enable you to complete, the things that you're looking for right inside their search engine, it's going to be better user experience.
Thanks, TR. Now we'll hear from PT Black about the implications of China's unique internet ecosystem.
Going online in China is like falling through the looking glass into a scary world populated by hyperactive, aggressive, and non-transparent cyber dragons. Where are the familiar heroes? The Googles, the Twitters, the Amazons? And what kind of dragon is a Youku or a Tudou? I joke, but the list of absent Western online companies in China is no fantasy. But why is China so different? Government interference is, of course, a big part of the story. That great firewall is an active reality here. Language is another challenge, and developers within China have an obvious advantage. But ultimately, the reason is that Chinese companies understand that Chinese people use the internet differently. They've literally encoded this in their web design, blinking pop-ups and all. Just look at the difference in Baidu's homepage and Google's to see what I mean. Check out Baidu's extras, like news, bulletin boards for topical discussions, and personals. Baidu offers much more under its own name than Google does. This is something Westerners have been tisking at for years. They say it's clutter, it may compromise search integrity, and worst of all, it confuses the brand. But Baidu knows better. They know people here often surf without a destination and are grateful for suggestions from trusted sites like Baidu. They know people are less sensitive to conflicts of interest here. As for brand, let's just say there are many successful Chinese brands that stretch a lot further from their core business than Baidu. Don't take my word for it. Just grab some Junyao milk on your next Junyao flight. So Baidu, I salute you for not only great finance, but also great consumer understanding. Digital China is a unique beast. And don't forget, here in China, there be cyber dragons is good news.
Thanks, PT. With me now is William Baobin, Managing Director of Singtel Innovate in China, Clement Sang, Head of Performance in China, and Kyung Lo, a digital strategist with Tribal DDB. This week we're talking about Baidu, which recently released a glowing earnings report. Now, previously we've talked to others who have said that their main competitors, Tencent, Alibaba, and Sina, are all trying to catch up with them as they're way ahead. But, I mean, in honesty, are they so far ahead that nobody can catch up at all?
I think between the big three here in China, they're all in a massive fight. And it's not a single front fight. It's not just about search. It's not just about e-commerce. It's not just about social games or chat. They're all fighting each other on multiple fronts. So it's not whether one can catch up with another in a particular category. It's how they're doing holistically overall.
And has everybody completely forgotten about Google? Or are they coming back and are they in the mix?
I think Google has stepped away, and they did that for their own reasons. I think people are pretty familiar with why. But it did create a bit of a vacuum in the market. We saw some of the tier 2 or the other major players come back in with their own search offering. None of those have seemed to get much traction. So again, it's not who's leading in search. I think Baidu, as the main player in search, has a pretty dominant market share, around 84% now. And it'll be difficult to unseat Taobao and e-commerce. But the real battlefield is outside of the search area, on the battles on the multiple fronts, from Weibo to buying, to advertising, to banner, where the BAT, Baidu, Alibaba, Tencent, where they start to overlap. That's where the interesting dynamics will occur.
Now, Clement, you've had some strong opinions on our show before. Do you disagree?
No, I think William's on the money on that. The question is not necessarily about a category or service-specific goal. It's more about the audience and its behavior evolving. So from a search text point of view, yes, Baidu is the first destination for most new users. But as they grow in maturity, they understand more about digital, they'll go to Taobao because they know it's the go-to place for e-commerce, not necessarily any other competitors. From a social gaming perspective, maybe if they're the right target audience, they'll be on QQ. So I think from that perspective, as the user grows and as the base expands, yes, Baidu will snare that first tier set of audience. But as you said, holistically, can they hold this across 3 years, across multiple platforms, across multiple channels, and grow with the audience? The difference being in that Google grows through acquisition and they separate. When you go into Google, you leave Google. They earn money on performance. Baidu, they have so many channels. Once you go into Baidu, they want to retain your click. The issue then is the content going to match that level of interest? Is it going to deliver a smart result to that search query? Or will that person over time just say, I'm going to go to Taobao, I'm going to go to QQ, et cetera, et cetera.
And Kyung, you work in terms of strategy on exactly analyzing these issues. From your perspective, what are some of the top verticals that Baidu has developed successfully?
I can't say anyone that stands out, particularly against their competitors. For instance, I mean, Baidu cannot stand up to Taobao. Baidu cannot stand up to Sina Weibo. So Baidu at the moment is, like Clement says, at the very beginning of the consumer journey that we're looking at in practically all the campaigns that we are developing for our clients. So Baidu always starts at the beginning of the journey where somebody searches, and it's not necessarily only Baidu, because there are also spontaneous visits to the campaign sites that we develop as well, coming from other media and including non-digital media, which still plays a huge part in the consumer journey. So I would say that Baidu at the moment is still really strong in search, but with the rest of the verticals, I think they'll still have quite a bit of work to do.
That's an interesting point. You know, we talk about the digital space so much that our heads are really focused in that direction, but you just brought a big point, which is non-digital is still a huge driving factor. Can you put it in context? So on the campaigns you've worked on, what percentage of audience is coming from non-digital?
Well, at the moment, we are looking a lot at mobile. And when you're talking about starting the journey into the digital space on mobile, usually you're talking about people just walking around, being able to snap QR codes onto their mobile phones and then to start that journey on digital. And you know, and that's playing a huge part because people have their mobile phones with them practically 24 hours a day. They sleep with their mobile phones. They they don't spend so much time compared to mobile on their PCs. So that is a huge area that we're looking at, and that's where non-digital space is coming back into play.
But I mean, overseas, there's actually already been a lot of discussion about how effective QR codes are. So when we look at in China, are people really looking at these billboards and pulling out their mobiles and snapping and being engaged? Or is this just right now being flung onto all the different collateral and the communications material and people not really connecting? What do you think?
I think the vast majority of the agencies out there don't know what they're doing on the mobile side in China. And the mobile platforms themselves are not being particularly helpful either. Agencies are having a tough time. The issue is that they don't have a context to engage with mobile advertising. They don't have a platform to help manage it, and they don't have measurement. So they can't compare apples to apples, mobile to online, because actually mobile delivers an audience a little bit more easily, whereas most of the online, the traditional cost per day, you actually don't have great measurement.
And is it fair to say right now that mobile is still very nascent, in terms of people really understanding, as you mentioned, agencies not understanding it, but actually even some of the service providers and some of the brands themselves not knowing how to utilize and capitalize on mobile products?
Because a lot of the agencies are coming from a brand background, whereas mobile is much more suited to performance, sort of like a search background. But since most agencies don't know what they're doing on the search side either, it creates difficulty. So maybe I'll kick it over to you. Because you're in this area, right?
Yeah. And that is the growing tension within agencies and the clients, is the conflict between branding and direct response. And mobile is being driven from a CRM perspective. So it's the financial institutions, it's auto that is driving mobile, that is driving solo mo. It is not branding, because the background and the objectives are completely different. But on that basis, I think we will see a change, because banks have got solid investments. They're driving into Rinrin, they're doing credit cards, they're doing joint deals, they're doing location-based deals, they're doing daily discounts. That for me, is definitely a growth area. Tie that to mobile search, then you have the complete ecosystem. The question is, do the brand people, are they able and willing to move into direct response? And I think it's more of a change of mindset. It's a question of access to data. And it's a question of convincing your branded client to change to direct response. But I think they're getting pressured, at least from a digital point of view, to prove that digital contributes to sales. And from our perspective, the clients that we're talking to, they are now getting challenged to prove that digital contributes to sales. And so everybody is now thinking about direct response. So I think over the next year, it will shift. You'll see some standout cases next year in mobile driving point of sale.
So Kyung, it sounds like you have a challenging job and you're facing a lot of these questions, I'm sure, at the forefront. I mean, what are some of the strategies or solutions you've found in helping to bridge this gap or at least help carry the clients forward?
I find it tremendously fascinating. I find that, just when I was thinking that advertising is getting so boring, or marketing communications is getting so boring, coming into China and finding all these, China's own ecosystem, digital ecosystem in its work, and then on the larger sphere, a non-digital ecosystem, advertising ecosystem that is all its own, that you don't have any other model outside of China. It's thoroughly fascinating. And Clement is right in the sense that a lot of clients now are putting into their annual operating plans to see what is digital actually going to be delivering in terms of sales. And they want to see the nuts and bolts of connecting the dots from somebody searching on Baidu all the way to the buy button on Taobao. How does that happen? Where does social come in? How does a Weibo post get somebody linking all the way to Taobao or to the flagship store? And it's a fascinating thing. And it's not the same with every client, not the same with every campaign.
William, Clement, Kyung, thanks for being on Thoughtful China. That wraps it up for today. Be sure to subscribe to us on Tudo and YouTube. You can also follow us on Weibo and Twitter. See you again.